Hello everybody, so here is a quick bonus end of day video. I wasn't going to do a video, but I'm going to do a video because some stocks are moving too fast in my view. So the title of this video is The Green Too Fast. Too fast green question mark. And I want to talk about a whole bunch of stocks. Some of them are behaving well, some of them in my view are kind of misbehaving, if I could call it like that. So folks, for some stocks, this is too fast. For example, AMD in my view, that's too fast. Intel, that's way too fast. Don't get me wrong, I'm happy for the government. They made a lot of money on Intel, but it's way too fast. I think some of these high flyers, some of you told me about like Marvel Technologies, for example. They've run too much. I mean, to me, they're going to mean revert to me. The only move today that I understand today is a move like Amazon or Nvidia. Like, Nvidia up 399%. Today, I guess, depending on up 4% today. I understand that because Nvidia hadn't moved in like 7 months. Like Nvidia was stuck between 170 and 180 for how long? So I understand Nvidia, but some of these other stocks, I find that they're going very, very fast, especially, so we didn't get the breather, right? We didn't get the breather that I wanted. I wanted a breather week for a lot of assets. We didn't get it for the NASDAQ. We didn't get it for a lot of the AI stocks. And the reason why I wanted this is because, the geopolitical risk, I mean, we all hope that it's gone. But I don't think it's entirely gone just yet. In fact, if you look at oil today, if you look at the Brent oil price, we're at 106. We had dipped last week down to the 90s, but we now came back, right? I mean, not last week. That was not long ago. We had dipped, but we now came back quite a bit. So as far as I'm concerned, it's expensive. Like oil is still high, and even if we resolve this oil situation and the market is okay, you still have a market that can drop for a tweet. You still have a market that can drop for a tweet, and therefore, I believe that stocks should probably rise in a much more steady fashion. Less sharp of a rise, because if they move up so fast, they can go down so fast with a tweet. And I realize, you trade the market that you're given, but in my view, this is another threat, right? We could have tariffs, right? This was this morning, Trump saying he wants a big tariff for the UK. So this tariff situation is not going to be over. We're going to have a lot of noise. And so I think I like to see the stocks move slowly, steadily, but over multiple months in a world where there is so much noise. So answering the question, if you follow me in this channel, do I still trust the market? I'm tempted, but I still have a cash pile. I'm tempted, but I don't really trust it too much just yet. But there are assets where I like the price action. So, by the way, this is one of the artifacts of these money flows. So when you're going to have violent money flows in like Intel or AMD, what do you think people are selling to buy Intel or AMD? That's right. They're trading. They're selling Nebius. They're selling CoreWeave. So for some reason, the market seems to not like the neoclouds anymore. And so I want to talk about this really briefly. I watched this Nanalyze video, which was pretty good, by the way. I like Nanalyze. But the point is, of course, the title is to get the clicks. But the crux of this video is that if there is a 10-year boom, if there is a long-term boom in AI, Nebius, CoreWeave, Iron are going to do fine. The scenario where Nebius, CoreWeave, etc. don't do fine is if the AI build out is a one-time impetus, and then we stop the build out, which I definitely don't think is going to happen. This is not like fiber, right? You can have enough fiber. In fact, we've had enough fiber. Intelligence is a much bigger construct than communication, right? Fiber was for communication. That was a very big construct in the 2000s, but it's not as big of a construct as intelligence, super intelligence. Intelligence is limitless. And so, that's my rationale for owning Nebius. And I've been very happy with Nebius, even though I also do think that Nebius ran too far, too fast. But you know, it's the price action is a little better. I'm glad to see those cool off. Those cool off. One quick point as to why I like Nebius more than CoreWeave or IREN, and this is something that always is ignored whenever people cover Nebius. Their VC stakes, they own 28% of ClickHouse. ClickHouse is likely the next snowflake. You can explain a lot of the market cap of Nebius because of the VC stakes that they have from the Yandex spin-off. So this is important to include in the analysis. Nebius, to me, because of their VC stakes, you know, they have AV Ride as well, which is doing fairly well. Because of their VC stakes, in my view, this company should deserve a premium because they own a bunch of VC stakes. Now, you may have seen my videos on Zoom where I talk about something like 70%, maybe 80% of the market cap of Zoom now is explained by Anthropic. The market does not really give a conglomerate premium. But, you know, nonetheless, these are highly monetizable assets that give a margin of safety, in my view. Another point that Nala made in video here, talking about depreciation. Yeah, it's all about the depreciation. It's all about what's the useful life of a GPU. But, you know, what we've seen over the past year is that Nebius used to have a 4-year depreciation scheduled. They increased the depreciation schedule to 5 years. So they depreciate them over 5 years now, which means that they think the useful life of GPUs is 5 years. And CoreWeave used to have 4 years too. They increased it to 6 years. The useful life of these GPUs is longer than we thought. And it's definitely longer than the useful life of a Bitcoin miner, by the way. Like 50% longer than the useful life of a Bitcoin miner. So from a depreciation standpoint, it actually makes a lot of sense to see IREN, of course, move into that and to see a lot of Bitcoin miners, which I think is the plan for many of the Bitcoin miners. It makes a lot of sense for them to move into bare metal GPU rental. Because if these things actually lose all of their value over 6 years and not 4 years, well, that changes the economics drastically. I mean, it literally makes them 50% more attractive. It makes the economics 50% more attractive. So I think we have an insatiable need for tokens. And I like these companies because they took a breather today. I like that quite a bit. Ideally, I'd like to see Nebius stay between 130 and 150 for 6 months, right? Ideally. I'm in no hurry. I think if the market has taught us anything in the 2020s is that we should not be in a hurry because, we have crises over and over and over again, giving us opportunities to buy and add more stocks. So anyways, other stocks that I like, that I think are not too much too fast is HIMS. The HIMS price action, in my view, has been healthy. Yesterday's price action made absolutely no sense, given the partnership that they announced with Lilly. I know some people don't want to call it a partnership, but they had the permission from Lilly to do it, right? So I call it a partnership, even though some people didn't call it a partnership. That's okay. The point is the market reacting properly today with HIMS up 8% today. That's the reaction it's still nowhere the reaction we should have had, but it's more in line with the type of reaction I was expecting after such a huge deal for HIMS. I like Strategy's price action very much as well. Let's stay in the 170 range for months, please. That's healthy. That's better. I don't want to move too fast, because if we move so fast, then we could have a tweet that takes it whole down again. Let's consolidate a base. Let's consolidate at this level. Right? Bitcoin is the same way. Bitcoin 77,000, Bitcoin behaving like a stable coin. I like that we are in the lower end of neutral on the fear and greed for Bitcoin. And then lastly, I know you know that on this channel I don't cover Tesla because everybody else covers Tesla, but Tesla is my number one position. Tesla is a very large position for me. I love Tesla very much. I love the price action of Tesla even more. This is super healthy. Tesla's price action is super healthy. I love it, right? We're down 6% in 5 days. We had ran up well, like we are run past 400. Was it 403, 404? I like it. I know a lot of Tesla only YouTubers didn't like the call. But, ask yourself, did they not like the call because maybe they bought a bunch of leaps 2 years ago? And those leaps are about to expire in 6 months or in 12 months. Yeah, if your leaps are expiring, in a few months or at the end of a year, if you're out of the money leaps at least are expiring at the end of a year, you and they're not called leaps anymore, of course, if they're expiring at the end of the year, you might not be so happy about the timeline, right? That's the problem with options. A lot of people play options on Tesla. Of course, Tesla being the third most options active stock after Strategy and Stretch, the third most is Tesla as far as options volume go. After Strategy, so it's the second most. I think Nvidia NVDA. You get it. It's top 5, something like that. I mix up my charts. The point is, people are going to be upset because they got a timeline. They got options expiring at a fixed date. And there is one thing that Musk has taught us is that you cannot time him. You cannot time Musk. It's almost a meme at this point, right? The Roadster was supposed to be in April. Now we've delayed it by a month, I think, or more like that. It's you always extend the deadline. I mean, it's you should know that by now, right? And so placing a bet on options when you know the deadline's going to be moved makes no sense to me. I take a very long-term horizon with Tesla. And I ask myself a simple question. Do I see a scenario where Tesla is not the monopoly, at least in the USA? Right? Europe will decide whether they want to let in Chinese competitors or not. It seems like Europe likes the Chinese competitors. But the Chinese competitors are never going to go to the USA. So do you want to own the future leader of AI, energy, robotics, vehicles, transportation, energy? Do you want to own that or not? To me, the question is that simple. It's that simple. Tesla is a vertically integrated company. They own the entire supply chain. They control everything. They even have a construction company in-house where they build their own buildings. They do everything in-house. They do the chips in-house. It is the company of the 20th century. 21st. Oh my, I'm tired. It's the company of the 21st century. Tesla is the company of the 21st century. So, of course, they're going to do a lot of CapEx investments. They're going to invest in tangible stuff. I like that very much. What do I prefer? What do you think I prefer? Do I prefer to see Tesla or even Amazon? Amazon's doing it, right? They're investing a lot in their data center, too. They spooked their shareholders last call, talking about $200 billion. What do we prefer? Do we prefer companies that invest heavily in tangible things? Like factories and manufacturing lines, the machine that builds the machines, data centers. Do we prefer that, or do we prefer a company like Apple who just does buybacks? Apple has been doing so many buybacks. Ever wonder what would happen to the stock price of Apple if they stopped having a perpetual bid on their own shares? Like buybacks can be a trap. It can be a trap for capital destruction. And sure enough, Apple has missed a lot of innovations. Right? Why is Apple not at the forefront of the LLM when they had Siri? Right? Apple missed a lot of things. So anyways, I like to see companies invest in tangible stuff as opposed to see them invest in capital destruction, which is what a buyback is at the end of the day. At the end of the day, you destroy capital when you do a buyback, right? So anyways, I like the call very much. I think, yes, he extended the timeline again, but did you really not think that was going to happen? The terminal value has barely changed, and the terminal value of Tesla is unfathomable. So it's a vertically integrated conglomerate. To me, it's a must-own stock. To me, it has been the must-own stock for close to a decade now. Well, maybe not, maybe 7 years, 6 years, and it will continue to be the most-owned stock. And of course, Tesla is heavily criticized by everybody out there. But may I remind you that back in the early 2000s, Amazon was criticized for maybe half a decade, maybe a decade. People saying Amazon is the poster child of overvaluation. May I remind you that Apple, too, was so criticized in the early days of the iPhone. So criticized. BlackBerry was the way to go. Apple had no keyboards. Many early Apple investors were ridiculed and laughed at, just like Tesla investors today are still sometimes ridiculed and laughed at. Granted, I guess it's one of my least controversial stocks that I own. A lot of people disagree with my picks, and that's okay. That's how you generate alpha, by being different. At least that's what I think. So I love the call. I wasn't bothered a single bit by it, and I'm very happy to see Tesla not move too fast. It's more time to accumulate, which, you know, I'm tempted to do at these levels. I just want to see the market calm down. And unfortunately this week the market did not calm down. The market stayed crazy, but it stayed crazy to the upside for a lot of stocks, and that's not healthy either. Like steady. I want steady. So anyways, I know you trade the market you got. You don't trade the market you want. And so because I don't have the market that I want, I'm prudent and I'm not rushing in. That's my take on this, because I know that I don't know. I know that I don't know when a tweet can drop and make the NASDAQ go down 3%. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me next. Thank you for watching, and have a wonderful, wonderful day.